We are joined by Dale Rogers, researcher, ASU professor, and executive director of the Cariska Project, of whom we're excited to discuss some of his research on tariffs and their effects. But I did want to start by saying thank you for joining us today.
Yeah, nice to be with you.
Awesome. So could you start by explaining what a tariff is and the role it's supposed to play, and then also who pays a tariff, as that's something that seems to have people confused as it was discussed more this campaign season.
Yeah, so a tariff is basically a tax. So on goods that are coming from outside the country, any country, um, uh, that's a tax placed on the item. Usually it's to protect industry in the country, and in the end, the consumer always pays for it. So you can look around the world and see countries with high tariffs that don't always work that well. Like for instance, Brazil or Venezuela. China has a lot of tariffs as well. But Brazil is a country sort of similar to the U.S. except with closed borders, and their economy has suffered for, I don't know, 100 years because of that. So tariffs, we have about 150 years of economic theory that show that free trade is the best. And it's surprising to me at this point in my career that all of a sudden tariffs would be sort of a watchword of the Republican Party. It just makes me kind of think that people have gone nuts lately, and it's surprising and disappointing because it will definitely impact inflation.
So, yeah, I wanted to go into that. What are some of the more unintended consequences, risks, dangers that come from having tariffs in regard to, I guess, like supply chains or just overall inefficiencies that can cause even domestically in an industry?
If you go back a couple of layers in the supply chain, almost everything has roots in China, almost any product. So you can think, okay, we're going to get it from Mexico or we're going to get it from inside the US, but the people in Mexico or from US are going to get components or subassemblies or something from China, or at least raw materials. You know, a lot of products, the components of the product come from all over the world. We really couldn't make an advanced microprocessor only relying on the US. We just couldn't do it. The machinery, the wafers and so on come from all over the world. So we've built over the last 60, 70 years this global model, particularly in the last 40 years, and to undo it is going to be very painful and also is likely to create friction. You know, we have two business schools at Arizona State University, WP Carey, which I'm part of, and then Thunderbird, which used to be the Thunderbird School of Management, used to be independent. And the guy that started Thunderbird back in 1946 said something, you know, borders frequented by trade seldom need soldiers. So if you're trading with China, if we're an important trading partner, it's going to make it less likely that they're going to want to go to war with us. I mean, if you look at Russia, Russia doesn't really have much to trade these days. What they got oil. Is there any Russian products you want? There isn't. Um, and so it's not surprising they went to war with Ukraine. Um, Iran, there's no Iranian products we want except um, maybe those pistachio nuts, but for the most part, we don't trade with them either. and we have high tensions. So um, uh, tariffs are uh, a huge tax on consumers, particularly the tariffs of the size that Trump is threatening, and also they're likely to create tensions with the country you put tariffs on, and those tensions can sometimes lead to soldiers shooting at each other, and that is not good.
So, what are some of the more long-term effects of tariffs? I know, obviously, some are going to come from the big cost being passed down to consumers and through the different sellers and buyers. But what are some of the more long-term implications that can come from putting tariffs in place?
Well, if you look at Brazil, the Brazilian computer companies, for example, and I've had a long history in Brazil. I have a position down there in addition to being a professor at Arizona State. I'm the director of global projects for ELOS, Instituto Logistico Supply Chain in Rio de Janeiro, Brazil. And if you look at the level of inflation they've always had in Brazil, and up until 1994, they had a lot of months where inflation was more than 100%. And even since then, they may have much higher inflation than we do because if you if you sell Brazil a car or a computer, it's going to be either 50% of the retail of the cost of that computer or 100%. And and so it makes as we moved into the information age, and everybody's online, it's made it much more difficult for non-rich Brazilians to get to participate in the modern economy because they have the tariffs on. So there's not just the cost that the product is higher, there's also a societal cost as new businesses can't be created very easily. Um, People on the lower end of things are more likely to stay on the lower end of things because prices are just way too high. And the world is a complicated place, and sometimes it feels to me like our president-elect, not sometimes, all the times, our president-elect is sort of a two-dimensional guy in a multi-dimensional world. And he really doesn't understand the connectedness of these supply networks, these supply chains, and how changing one little thing can end up really screwing up the supply network. And the tariffs in 2018, that when Trump was president the first time, that he put on, we wrote that paper, Protect Me Not, the effective tariffs on U.S. supply networks. And there's no question, we did an event study which looks at the stock price value of companies that are in different industries. And those 2018 tariffs, which were supposed to help American business, actually were a negative hit to the value, the overall market capitalization, the overall stock price of the companies they were put on to protect. So they usually have the opposite effect of what the government is trying to do. I mean, can you think of a lot of really valuable Brazilian companies? There are some, but really valuable Brazilian companies that really are lucky because of tariffs? No, tariffs are are a hard thing. And what ends up happening is not only are prices higher, but you usually end up with lower quality product. So there's a Brazilian computer company, and most Brazilian executives won't do not want to buy computers from that company because they're not as good as Dell or HP or Lenovo or Apple. And they don't have to be because Brazil is a protected country. And so I'm sure that the Brazilian people, if they had their choice, would want to take those tariffs off and open up their borders a little bit. Um, this idea that you have to have closed borders seems naive to me.
Yeah, it seems a lot of the time it's kind of self-defeating. I mean, you just have to think about why we're getting it from that country in the first place, probably because it's the cheapest to do so, which is what keeps the prices lower. So, like, if we're Xing that country out, then I mean, it's likely going to raise prices. Another thing that your paper talked about was tariffs' impact on network structures. Could you kind of like briefly explain what these are and then how tariffs impact them, whether positively or negatively?
Yeah, it's kind of unfortunate that we call, what I do supply chain management. Really, it's supply network management because it's not really a chain, it's a network that kind of goes all over the place and it quickly fans out. And, so a finished product, you can have several thousand suppliers, particularly for a complex product like a car or a computer or something. You can have several thousand suppliers that make components or raw materials for that product. So tariffs are very disruptive on those network structures. So it forces companies to figure out new suppliers. And it's not just we're getting stuff from the cheapest place. There's a lot of stuff that we can only get from one place. You
Mhm.
know, over the last 50 years since President Nixon went to China and opened it, he did a lot of dumb things, but opening up China was a brilliant strategic move. And opening up China has developed a lot of capabilities and is the source for a lot of stuff that we can't really get somewhere else. And so for us to put tariffs just randomly, it feels to me randomly, on everything we get from China is foolish. Because actually, another part about the network structures is there's a multiplicative effect. So let's say you're the focal company sitting here in the US selling whatever it is. Well, as you go upstream is toward the supply base, downstream would be towards the consumer, upstream would be towards the suppliers. As you go upstream and you put tariffs on different levels of those suppliers in the different tiers. So the first tier sell directly to you, the second tier sell to the first tier suppliers, and you can see how it fans out very quickly. Well, there's a multiplicative effect as a 10% tariff or a 20% tariff, or Trump has threatened some 60% tariffs. You can't just raise the price just 60%. You're If you're one of those suppliers that's getting a tariff put on, you're going to raise the price more than 60%. And so there's a multiplicative effect as you move down the supply network. And so tariffs really disrupt these established supply network structures, and it's hard to build a supply network. It's a really difficult thing,
Mhm.
particularly if you're going to make it economically difficult for most stuff to come from outside the US because there's a lot of stuff we don't make anymore. I mean, there's no televisions made in the United States. Um, uh, silicon wafers for semiconductors. There's no American silicon wafer companies. And there's a lot of stuff that are very low wage industries that really don't make sense for Americans to have. Do we really want to be making clothes and making sneakers and so on? I don't think so. I think it's way more efficient to have those made somewhere else. And the truth is that as you move closer to the consumer, each step in the supply network, in the supply chain, the closer you get to the consumer, that's where the most profit is. So there's not a lot of profit on the Chinese factory that's making jeans that are going to be sold at Walmart.
Mhm.
There's way more profit at the retailer, Walmart, than at the manufacturer of the jeans or the manufacturer of the yarn that gets turned into jeans. It's not that China is taking advantage of us. The US has been very tough negotiators, and 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 we have a much higher standard of living, and much higher than we did um, than we did back when we made most everything inside our own borders. There's the idea of economic specialization, which really allows for us to specialize in stuff that works better for us here, and then stuff that doesn't really matter very much either strategically or cost wise, we move outside of the US. But we can't just get rid of everything coming from outside the US and then just say it's going to magically get developed here. Certainly, tariffs will increase opportunities for new companies here in the US and older companies, but it's also going to be it's going to be quite negative both for product quality probably, but definitely for price. I mean, do we want to be Venezuela? Do we want to be Brazil? I don't think so. And it's crazy to me how the world has been turned upside down with the Republicans all of a sudden deciding, and it's mostly one guy who doesn't understand stuff very well. The Republicans deciding that we're going to close our borders when that's always been a huge advantage for the U.S.
But yeah, I want to say thank you again for taking the time to speak with us about tariffs and economics and things like that. We really appreciate the conversation.
Yeah, very nice to talk to you. So